Good day. My name's Warren Davison, and I'll be taking you through the PSG Wealth Offshore Solutions update ending March 2022. After an exceptional 2021, the first quarter of 2022 has been difficult for markets. Concerns over the economic implications of the Russian invasion of Ukraine and the potential need for a faster pace of interest rate hikes to combat higher inflation weighed on both equities and bonds. Russia is a major energy and commodity producer, and the escalation of tensions pushed energy and commodity prices to extreme levels, exacerbating the surge of inflation, supply chain disruptions, and the risk of global growth. Brent oil and natural gas prices were very volatile. They spiked early in March before falling back, with Brent oil ending the month at $103 per barrel and European gas price at 121 euros per megawatt hour, up 33% and 55% respectively since the start of the year. Developed market equities recovered some of their losses to end March up about 3%, but were still down around 5% year to date. Emerging markets lost a further 2% in March, leaving them down nearly 7% year to date. A new round of the Omicron cases in China weighed on Chinese markets, on top of the broad geopolitical concerns. From a style perspective, commodities led Q1, up around 25.6%, the only sector producing positive returns. Over the quarter, developed market value stocks were only down around 0.5%, while growth stocks fell nearly 10%. This was partly due to the fact that the 10-year Treasury yield reached 2.4%, up from only 1.5% at the start of the year, after the Federal Reserve delivered its first rate hike since 2018. The global aggregate bond index fell 6.2% over the quarter. Expectations for faster monetary tightening in the US also contributed to a rally in the dollar, which finished the quarter up about 3% against both the pound and the euro. Looking at some of the short-term monthly highlights, the solutions overall had a strong month, with 59% of our underlying managers outperforming the category average. For the month, an interesting observation is that the top performers were all managers which have significant breadth in the market, namely Net Group, HSBC, and iShares. Looking at the risk radar, Fidelity was a new addition for the month. T. Rowe Price Global Allocation remains on the radar from last month. Baillie Gifford remains from last month, but MFS Prudent Capital is a new addition. Threadneedle and Vulcan remain on the radar. However, T. Rowe Price Global Focus Growth is a new addition for this month. The Global Preserver outperformed the peers by 42 basis points in the dollar class and 219 basis points in the pound class for the 3 months ending March. The ranking tables have seen a strong pickup in the short term, with the value style benefiting the solution. The fund places first quartile over the first quarter. Looking at the longer term numbers, these still remain strong, with the 3-year relative ranking improving. For the Global Moderate, the fund outperformed the peers over the first quarter. Shorter term numbers have been strong, which have flowed into the longer term numbers. Overall, the ranking tables have remained relatively stable, with the fund holding majority of its time within the second quartile. The Global Flexible underperformed the peers by 280 basis points in the dollar class and 90 basis points in the pound class for the 3-month period ending March. The month saw a strong bounce back for the fund, placing in the second and first quartile for the USD and GBP class respectively. However, this was not enough to pull the fund out of the fourth quartile for the quarter. The longer-term numbers remain strong, with both classes ranking in the first quartile over all periods longer than 2 years. The global creator unfortunately underperformed the peers by 35 basis points over the first quarter. The month saw a strong bounce back, with the fund placing in the first quartile. However, again, this was not enough to pull the fund out on a year-to-date basis and therefore placed in the third quartile. The longer-term numbers still remain strong, with the fund placing in the first quartile over all periods longer than 2 years. Overall, the peer group rankings remain strong on a short, medium and long-term basis. The global preserver had previously experienced some turbulent periods as uncertainty remained within the fixed income market. However, the value rally has played well into the favor and therefore shorter-term results have improved significantly. From the table, we can see that 3 of the 6 funds have produced first quartile performance over their recommended holding period. 2 funds are placed in the second quartile and 1 fund places in the third quartile. To summarize all of the commentary into the 3 measurable pillars of consistent above-average performance at below-average risk whilst maintaining a competitive price, we can see that PSG Multi-Management are in fact performing according to their 3-pillar approach. Thank you for watching. Should you need any further information, please feel free to reach out to myself or some of the other analysts and we'll be able to assist you. Thank you.